The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy relatively tight has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting, that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say,
as the most powerful organization in the world, the Fed continues to play a significant role. This is because the ISM has remained below 54-31 months due to relatively tight monetary policy, which has caused corporate America to operate cautiously and keep the car in low gear because they were unsure of the direction of inflation and monetary policy. Therefore, I believe that when the Fed starts to ease, it's not only a change in interest rates, it's a signal for businesses to gain confidence. As you are aware, when the ISM rises above 50, it not only boosts economic activity, but also likely revitalizes the labor market, which has been stagnant for what seems like over a year. Does that imply that there will be more recent legs to this very amazing stock surge if the Fed remains dovish or continues to cut? Indeed. Furthermore, I believe that growth might resume without the strains of inflation. In my opinion, people automatically assume that a rise in growth over the past few years indicates that inflation is happening. It hasn't happened for 25 years. However, I believe there is a way for growth to be stronger next year without a pickup in inflation if businesses start to grow, and we know AI is driving productivity gains, which is a huge tailwind for businesses. We also know that there are initiatives around Wall Street that are boosting productivity because they are going to build on the blockchain. Profits in stocks will benefit greatly from that. Yes? And listen, Tom, we've discussed this a lot, and I'm sure you've also discussed Scott and other people. You have been right, you have been powerful, and you have been around for a long time. But does this market ever take a break? As a 401k holder, I enjoy it. But after nearly 30 years of working as a TV analyst, I'm beginning to worry a little bit about it. Yes, I suppose. Although there will inevitably be a downturn, sentiment is still firmly negative in terms of timing. In my opinion, the AI net bulls less bears is the gold standard. It has been negative for 6 weeks in a row. In reality, that has never been a market peak. That has to turn out well and last for a few weeks, after all. Therefore, I believe the market may pull back if we say between now and year. It's probably from higher levels, but I think it's plausible. I believe that even yesterday's FOMC was met with a great deal of skepticism. Many of my clients told us that they believed the stock market would drop since 25 was priced in. But that was the general perception, according to nearly everyone I spoke to. People were cautious yesterday, I believe, which is why we're seeing the categories that ought to rally, like the financials, small caps, cryptos, and even the Mag 7. What if you had a warning from your desk before your retirement was erased? Your retirement account could be wiped out overnight if you don't purchase this package. There is only 100 pieces available, so order yours right away using the link below. The Nvidia Intel agreement to jointly develop CPUs for PCs and data centers is the day's biggest stock news. Our own Christina Parts, who covers the semiconductor industry, and Stacy Raskin, a senior U.S. semis analyst at Bernstein, are now joining us. Christina, given the recent spate of Intel investment deals, this is intriguing from your perspective. Are you surprised by Nvidia? Oh no, the timing is fantastic, but I say that because politics does play a part in this. Nothing pertaining to the White House is mentioned in the news release. Remember that just a month ago, the Trump administration invested almost $10 billion, which translates to 433 million shares and $20 in 2047. Their investment has increased by 51%. Not too horrible. A chance for President Trump to say something significant about them. But the press release made no mention of it. According to some sources, this had been planned for a while, according to Dow Jones. Although there is no mention of the foundry sector, The fact that Nvidia is providing Intel a shot in the arm does speak something about their potential packaging capabilities. The timeline for when the aforementioned PC chips and data center products will be manufactured is not specified. I believe we might learn about that via the press release at 1 p.m. Eastern Time. However, I'm curious about what this means for the partnership moving ahead. Stacy, Intel is up 26%. Nvidia is also doing well. It's up 3 percentage points, which is significant for a company worth almost $4.2 trillion. Do you think the market is a win-win situation? Yes, look, it's obviously in Intel's favor. As I mentioned in my comment, Jensen is the kingmaker. Therefore, they are free to use the money once more. It surely doesn't hurt to have his blessing, which is probably almost priceless, isn't it? Well, yes. AMD and ARM are among the other stocks that are likely down. And it makes some reason to conclude that this is a product deal rather than a foundry deal, at least for the time being. They would begin to eat into those kinds of sectors, if Intel's products grow more competitive, get designed into more sockets, and gain more market share. I understand the maneuvers. Then, for example, is 25% too much or not enough at this point? I'm not shocked that the stock is up good today, but that's a whole other discussion we could have. Yes, so is it too much or not enough in your opinion? I will not discuss that here. I'm not shocked that it's rising. That it's up good today doesn't surprise me. Given the paucity of information on what they would be creating, the timeline, and other facts, I would assume that he is implying that it might be too much. I'm not speaking for him, though. There aren't many details, to be fair. You do realize that you asked Christina if she was taken aback. Yes, that there is a contract doesn't surprise me. I believe that there were two aspects that were somewhat unexpected. First, the amount $5 billion isn't much money for Nvidia, but it is obviously a lot for Intel. Second, I do believe that Intel employees have been searching for foundry deals, and this is not one of them, and I think that makes some sense, without any kind of foundry track record. Intel finds it difficult to sell a foundry contract, and the meaning of that roadmap is still unknown. However, let's face it, their goods, business, and corporation also require assistance. They have been bleeding share, which is good in my opinion. However, I don't believe that the product bargain was really noticeable to individuals. I'm recalling what you wrote following the government agreement. Stacy, these funds were initially intended to be given to Intel at no cost. It seems terrible to give up equity. The unfortunate part is that the money alone most likely won't be sufficient to assist. Does this alter that opinion? Not at all. Once more, Intel has genuinely had sufficient funds to function. If they were going to build the foundry, they actually didn't have enough money to build out the capacity projections. For example, they received $5 billion, $2 billion from SoftBank, and $9 billion from the government. That comes to almost $16 billion. For instance, that alone is insufficient to develop Ohio. For example, Ohio is valued at about $28 billion, and that was a number of years ago. Most likely, there is more. However, every bit is helpful. They obviously need more money if their goal is to start a foundry, and this doesn't get them there. However, we're beginning to follow the route. If that's the route they're taking, I wonder what they'll have to give up later on to obtain the other items they need to travel down there. I'm not sure yet. It also doesn't hurt to make the move. It is not painful. The foundry point is something that both of you constantly bringing up. What does that signify then? Since it isn't addressed there, and the goal of President Trump's $10 billion investment is to restore American employment. Isn't that right? You want this foundry to be successful? Therefore, however, because the foundry company is so unprofitable, some board members previously tried to separate it. However, this is not a scenario where Nvidia is making direct investments in the foundry industry, which nonetheless raises concerns about the company's decision to retain that division. Stacy also mentioned that Nvidia doesn't need $5 billion. Over the next 5 years, Nvidia's free cash flow is expected to be over $500 billion. That's about 1%. Then, I don't like to admit it, but it's almost like a rounding mistake when discussing such large numbers. Therefore, I believe it is impossible to ignore the political factors at work at Nvidia. Why? You have the China relations. Nvidia is always used as leverage. Intel is being invested in by Nvidia. Intel is owned by the White House. The White House wants to make investments in this country. Here's a way to be positive, you know? The same is true with GTC, which will take place in Washington, D.C. at the end of October. Why is it done in Washington, D.C.? Giggles, we are aware. We understand why. I have no idea why. All right, Christina? Stacy. With both stocks moving, we'll stop there. Before the headlines, our Patreon members receive the precise cues and insider tactics. Click the link below to join us.